WhatsApp. Your reaction to that price tag?
Well, I love that valuation. We just launched a tech company called SkyTouch, which is a property management system that's cloud-based, and we're providing other connections to it and other products. And if that's the valuation that it should get, I'm loving where we're going in the future.
Anybody in the tech space right now who has any business like that is probably really happy today to see that kind of number. All right, so we're looking at basically what could be an all-time high here on the S&P. A lot of concerns right now that this market has gotten frothy. People point to the sort of lack of economic growth and say, how is it that stocks can be on this kind of tear? What's your reaction?
Well, my specialty is obviously in the lodging stocks, and I can tell you that we are in for a several-year run that's going to be pretty strong. And that's because of some fundamentals. Business is generally getting better, GDP is starting to grow more, employment's improving, which is really big for us because we are the 99% middle America uses us regularly. And in addition to that, the supply-demand balance for the hotel business has been so favorable for the last 4 or 5 years because there's been no financing to build new hotels that's going to propel the industry for at least another 3 or 4 years until inventory starts being applied. And therefore, that demand that's growing, both on the leisure side and the group customers starting to come back. Business travelers have been back, and we're seeing those improvements nicely. But that supply-demand balance is going to make for a good run for the hotels probably for the next 3 to 4 years.
So you feel as though the economy is on stable ground now?
I do. I think we've gotten past the government nonsense. I don't think we're going to have another shutdown. I think they learned their lesson. I think the lodging business in particular works on a couple fundamentals. For us, it's employment and it's GDP growth, and then it's supply and demand. All of those look pretty good for the next several years. And so from our perspective...
What happens if interest rates go up?
Interest rates go up makes it more difficult to build hotels. And so that actually will affect the growth of the industry. But again, that's positive for the existing hotel supply.
We've seen a lot of hotel IPOs this year, which also begs the question, are we seeing a bit of a top? Because one theoretically would choose to go public at the top. What's your reaction?
I think we're more in the third or fourth inning. I think there's still a lot of room left in this game. I think the IPOs clearly show a reflection of the optimism around the industry for the next several years, because I think a lot of that, in the IPOs, you're typically right, are more in the mid to the end of the cycle. These ones, I think people recognized that the valuations were reflecting a strong run over the next several years, but I think people are pretty optimistic about where the lodging business is going.
Okay, so it sounds like you're optimistic, and you do believe that we're in an environment where we're going to see growth and that the market will correspond to that.
At least for our business, I think it will.
For your business. But that's a big, I think that's a big barometer of what's going on as a whole, right?
Yeah.
I mean, people don't spend money traveling if they're worried about their jobs. Business travelers don't spend money. They'll figure out another way to do a meeting, whether it's via video conference or over the telephone. But if you're seeing an uptick in that, that's important. What about conferences?
So conferences are coming back. There's an expectation in 14 that the group customers are beginning to come back. That's been a little spotty over the last couple of years. That's not a big issue for our company because we're more smaller hotels, don't do a lot of group meetings. But we do smaller groups, and so as a result, we think that's encouraging for us. But that's going to add to the performance of the industry over time. And I think if you look at it, you've got consumer confidence rising. You can see that in the personal debt numbers. And so I think people feel good about their jobs. They feel good about their companies. More people are getting work, which is a positive thing for us. And so we look at all those factors. We say it's going to be a pretty positive year and in a pretty good run.
Let me ask you about this talk of a minimum wage of $10.10. You employ a lot of people. I imagine you have a lot of union workers as well in the hotel business. But $10.10, what is that going to do to the economy if, in fact, there's a minimum wage in force?
Look, I believe in economic theory, and economic theory says to you that if you artificially inflate wages, you're going to destroy jobs. CBO came out and said 500,000 jobs. My concern is that doesn't include lots of things. So here's what happens in our business. Our guys are getting squeezed on health care. There's a potential tax change. Hopefully that will be positive, but so far it is not. Over the last couple of years, their taxes have gone up significantly. And then they've got issues around labor and wages. As the economy improves, wages are going to go up naturally. If we artificially inflate them, their profit's going to go down. They're going to build fewer hotels because that's where the money goes to build new hotels. that lessens the job growth. And so as I look at it from an economic standpoint, I understand the social interest in trying to create more people out of poverty. I think net it's a negative factor that if you artificially raise
900,000 people would be effectively raised out of poverty.
But what happens is you're talking about a very small number. If it's 500,000 jobs, it's $2 billion on the economy. That's a big risk to take when in fact it could be 1 million jobs or more if you start factoring in growth.
All right, Stephen Joyce, CEO of Choice Hotels.